Market news now. Asian markets rose on Friday, tracking a rally on Wall Street where investors were buoyed by the Federal Reserve's positive outlook for the U.S. economy, and oil added to gains with predictions it could be headed back to $100 per barrel. While concerns over the China-U.S. trade were hanging in the air, equities continue to be supported by optimism that the global economy and companies are in rude health. That was reinforced by the Fed on Wednesday as it lifted interest rates and indicated more to come over the next year, citing strong labour market and playing down concerns about vulnerabilities in the financial system. Asia followed a global stock market pickup, with the Tokyo's Nikkei gaining 1.4%, while the Hang Seng was unmoved at 27,720. The Shanghai Composite Index gaining 1.1% to close trade at 2,821. Wall Street rose on Thursday, helped by gains in Apple, Alphabet and Facebook, as well as the U.S. Federal Reserve's confidence in the strength of the economy after it raised rates for the third time this year. The Dow Jones Industrial Average rose 0.2%, with the S&P 500 gaining a quarter percentage point to 2,914. At the same time, the Nasdaq Composite Index picked up 0.6%. For more on the markets, we cross to the Johannesburg Stock Exchange. Arabile Gumede is standing by. Good afternoon, Arabile. Over to you.
Yeah, good afternoon, Nzinga. Well, it is a bit of a muted day compared to what you've seen out in the United States and in Asia, where you're seeing quite a bit of green. It's all red here on the local bourse. More than 1% lost, really. The oil story also continues as it's well above that $80 a barrel mark. What that means for the local indices, however, is something that we'll be keenly watching as well. A lot of the stocks, including the likes of Investec as well, headed down today. But we'll unpack that in just a moment. Let's take a look at how the European and local markets are faring. Well, as you can see, the market there still in red locally. In Europe, a touch of red as well. But Warwick Lucas from Galileo Capital joining us now as we unpack a little bit of that market movement. Warwick, I think it would be a little surprised to see such massive drops in the market today, considering as well Asia is a fair bit of green. The US ended in a whole lot of green as well yesterday. A little unexpected, you would think?
Yeah, so some surprises there, I would say, but I think oil leaning in quite hard, and I think bear in mind the likes of Southern Africa certainly are negatively exposed to the oil price. I mean, South Africa quite clearly a strong negative correlation. We use a lot of energy, whether it's for mining or agriculture, and we're certainly not much in the way of producers. So yeah, high oil prices is definitely uncomfortable.
Yeah. Does that mean, though, it's a sustainable knockoff on the local indices and the local bourse? Because we have seen it go into negative territory for quite some time now. It's been a while since we've had a rally, perhaps now nearly 2 weeks, firmly above 80. So it seems to be, perhaps a mark that it will remain against. Does that mean we stay in the red for quite some time with the local indices as well?
Okay, so there's quite a few moving parts in our market. I mean, a big part has been the recovery in the rand as well, which, although it implies a nice improvement in confidence, is also something that can apply a bit of pressure on equities in the short term. I mean, we are mostly a rand hedge market, so weaker rand equals stronger market on average. So it's made for a bit of a cocktail as far as our indices go.
Yeah, I'm just taking a look now at the rand, as you said, 14.21 there against the US dollar. At some point even 14.06 earlier this morning. What are the chances, you reckon, that more confidence perhaps seeps in, a little more data perhaps comes in and pushes the rand perhaps just below that 14 rand mark early next week when PMI data comes out?
Yeah, I think it is a very data-hungry market, so that's going to be quite important. Now, although the SAB did not hike rates recently, it certainly showed via its MPC that it has an MPC that thinks independently, definitely showed some spine there, i.e. that it was prepared to pull the trigger if necessarily. So I think South Africa enjoying a little bit of a reputational buffer there. I'm glad they didn't hike rates. I don't think that's what the economy needs. I don't think that's really what the rating agencies wanted to see. But it was good stuff, open out there, quality looking stuff, and I think that markets like that.
It is the last working day as well of the third quarter. Do you think that has anything to do with market movement today? Do you think people are shoring up some investments, perhaps taking different positions, pulling out of certain ones as well? Do you think that has any role to play there?
Okay, so that sometimes does affect the quarter in, whatever's happening with the unit trust. You normally find whichever direction it's gone, it tends to reverse. So I'm a little intrigued to see this direction, because it's negative after a quarter that's been pretty negative. So yeah, that one's a bit of a surprise.
Yeah. Just very quickly, economically as well, my question then would be, yes, you have PMI data coming out next week as well, which will be a key indicator, particularly still in the third quarter though. Do you think we're perhaps going to head in that right direction, having seen the president just last Friday as well release that all-important growth plan? Are we going to begin to head in the right direction?
Well, from my lips to the heavens, but I would think so, yes. Predominantly, one, because you have had that plan which could introduce some confidence. Two, the key point being that the rand itself now, we've had a long period of severe weakness, which should have started putting some kind of underpin there. The rand is the primary shock absorber for the South African economy, and we should have seen now in this quarter three that starting to get some traction, and particularly in the area of manufacturing and mining, and hopefully some agricultural data as well, namely in terms of the price that producers actually receive.
Yeah. Very quickly, I don't know if you took a look, but Choppy's being halted off trade yesterday off the JSE. A few speculations around what's happening in Zimbabwe there, perhaps the Botswana leader as well, a bit of a struggle. In that retail market, particularly in South Africa, a bit of a struggle overall, and Choppies is not the least of those bearing the brunt of what is also a tough South African market.
Yeah, it certainly is messy. Look, Zimbabwe will be tricky because Zimbabwe is short of hard currency to keep its economy circulating. I didn't follow Choppies that closely. I believe it was expanding into Zambia, which also is an economy which is quite frankly under some severe stress. And I mean, if the IMF, for example, has to walk in and bail out Zambia, that's a potential headwind for South Africa as well, reputationally speaking. Not
much happening there, but the market in the red, clearly. Warwick Lucas from Galileo Capital unpacking the markets there with us. As you see, the rand around 14 Rand 21 against the US dollar. So some movement continuing to happen and continuing to flow, but it is the end of the third quarter. We're heading to the new quarter next week, but that's where the buck stops for this afternoon. Nzinga joining you right after this. Do stay tuned.